Hello everyone and welcome to another FxEdge Power Hour. I'm Marcello Ducille and today is February 11th, 2013. I'm going to do today what I've done for years, which is an analysis of the markets and evaluation of our strategies, which are based upon the 5 p.m. Eastern Standard Time close of our daily bars and our 4-hour bars. And then we're going to have a brief questions and answer session. So let's go ahead and get started here. I wanted to apologize for last week. Last week I did take the time off. I had did a 3-day fast, and that was a very good experience for me. So I'm moving right into our charts here. Let's talk about the STP. We're going to start with the STP series. And so what we have is the euro dollar, basically, which has had a retracement over the last week or so. We did have a change from red to green. The change from green to red, sorry, was a little bit too high for our tastes for us to take a sell. So we did not take a sell there. And you can see here that we're approaching this really about the 132.70 area, which is really our next area of support resistance that we should be mindful of on this drop on the euro dollar. So you'll notice here is that we do have kind of a range right here between 133.50 and 134 right now, 134, about 134.50. Okay, and we expect to see, continuation of the consolidation here, followed by a potential move to the downside, and we should see this in the next few days, and that's what we're looking for, potentially hitting a low at the 132.50 area. So that's what we can see for the time being, and we're going to actually be watching for price action there, and then we should have a change from red to green that will give us a nice buy signal, and hopefully we can get in on it and start making some money on this euro dollar. All right, so here's our dollar Swiss. Dollar Swiss actually broke through that trend line that we had previously. We had a change from green to red here, and that also was below our area. But like I said, guys, that was a very nice discretionary trade. I told you guys that last week. 1, 2, 3, 4, 5, 6. I think it was right here that I said it. And basically the trade would have been to take a buy here, about 60 pips of risk, and I was looking for upside up to 75 pips to 80 pips. If you remember me saying that, you can see here that prices continue to move up to 122 pips. So this was a very nice trade because we had a change from red to green, even though it wasn't a viable trade for the STP automated system. And we had these reversal candles, beautiful reversal candle at a key area. That really gave us a nice foundation for this push to the upside, and we're right here at a very key area at 9,200. You can see that 9,205 area has held. It's very strong. We've had 1, 2, 3 touches in just the last few days, and the market has kept and held that area of resistance. Has kept price down below that 9,200 area for the last few days. So. Clearly an area that we should be mindful of. Of course, over here you can see why, but that 9205, 9200 area was very strong. But we'll be waiting for a change from green to red so we can get into a sell here, and we're looking for the sell to continue to move down. Obviously, this is a pair that has been in a sell for quite some time. If you look here, starting at the head and shoulders pattern that we had in July, you can see that we've had nothing but a downtrend on this dollar Swiss. So that is the prevailing trend for us there. All right, the pound dollar. Pound dollar, we had a change from green to red. All right, and you can see here that it formed a doji on our buy signal, on our sell signal here. And that's what it, price basically moved off and pushed off here, so you'd have gotten stopped out on this pound dollar sell. Pound dollar sell here. Honestly, you should have been in a pound dollar sell all the way up here. This is the trade you should still be in. We missed that trade. It was a change from green to red, got us into a sell. All right, went up against us about 38 pips and then fell in our direction. And you can see here maximum favorable excursion of about 376 pips. That's where you should have gotten in, and so you should not be in on this small trade here. But if you were, you definitely took that hit there. I think we did as well, which kind of set us back just a tad bit. But it's okay. All right, so we have here the pound yen as well. We have a change from red to green that looks like it's trying to form here. We still have that range that we've got to look to. Let's talk about a range that we've been kind of bouncing between for the last few days, and that range is about 147.50, or is it 14800? I would dare say the 14800. With 14600 at the low, so about 200 pip range here. Maybe 145.50. Yeah, about 14600. So more or less 145.90 to 147.90. So about 200 pip range here that we are in. Clearly, we've been in an uptrend. We've never come back to that 50 MA. So we're going to wait and see what price actually does here. But you know, we've had 1, 2 touches here or tests of that 14800 area, and not quite gotten there. 147.93, 147.89 on this last bar. We'll have to wait and see what happens. This is a point of decision. The market will have to make a decision whether it's going to move up in continually here on this pound yen, or if it's going to drop off and fall here. So that's what we've got going on the pound yen. And if we are to see a continuation to the upside, then that would be that'd go well for this change from red to green. But I do see this range here being played. We could definitely have the range played. We could see a break downward. So we could see this 14800 area hold, and then we could see price make its way back down to the 14600 area of this range. All right, here's our Aussie dollar. Aussie dollar is actually broken through some key areas to the downside. You can see here that we have this consolidation here, 1, 2, 3, 4, 5, 6, 7, 8 bars here, and followed by a breakout below this 200. You can see that prices continue to move down. We've actually crossed some very key areas here. We're at the 1.0250 area, and the next area of support and resistance for us to be mindful of here is about 1.0200 and the 1.0150 right here at the bottom. We had a change from green to red, got us into a sell, and that sell did well in the first position. Second position moved to break even. We haven't had another shot at it, so we haven't gotten back in on a sell there on the Aussie dollar. Euro yen, we did have a buy trade a while back. Okay, and we jumped into a buy. We've had multiple opportunities for buys here, guys, all the way down here at the bottom, all the way, you know, coming up here. Last one was here, change from red to green, gives us into a buy. You can see where we jumped in here at the low. Price moves up. We hit our first take profit. Second position moves. We have a maximum favorable excursion of 687 pips, and you can see we're up in profit about 540 pips right now. Took a very small position on this thing. And so, what you know, we should have taken a bigger position on here, but certainly, you know, prices definitely moved well. What we'll be looking for is another change from red to green if we get a breakout of this range. And guys, this is a perfect example of this range being played. As you can see here, right at about 12400. And about 12700. That's our range on this euro yen. So we stopped here, took a pause on the way down at 12400, and hit a low of 123.50. Actually, that would be the secondary level, 123.50. And you can see how price just really just rejected that area, went right back up, and so we still have this range that's being played. We saw it in the first few days, and you can see that it's continuing being played. So what are we looking for? Potentially, we may see a test of this 12700 high again. Look for it, 12700, 127.50, that band. And then potentially a drop from there. So we're looking for price to find its way back down here. Up, down, up, down, up, down. Okay, and that's pretty much our euro dollar. I'm sorry, euro yen. Okay, so let's take a look at our 4-hour trades here quickly. We have the FxEdge Quattro, And a lot has happened on the FxEdge Quattro. We've had some down moves here. This one was completely ignored because it was just too much buy pressure. Here we get into a sell, okay, and this one actually goes against us. The retracement got us. We had the worst time to get in on this. We had a retracement there, and it got us out here as well. This one also took a hit. This one did take profit, finally. Very nice profit on this trade. 40 pips we're looking for. We had a maximum favorable excursion of 109 pips. And second position is actually still open, looking at 68 pips of profit. And that's basically where we stopped off on the FxEdge Quattro. Now, to put things in perspective, we just saw two trades that lost on the FxEdge Quattro. But the thing is that it had a big running trade all the way back here that was massively profitable. All right, so change from red to green got us into a buy here at the bottom at 133.10. Okay, and we had 33 pips of risk. You can see here, maximum favorable excursion of 400 pips. Okay, that is a massive gain on account here. And so the bottom line is that sometimes after that you'll have a slight pullback in your strategy. So after you have a nice big run, it's not the time to actually to add to your position. So if you're already taking positions at 1 or 2%, and you're like, oh, I just had a big run, this thing's working great, let me add another 2% onto it. That's not the time to add to that. When it has a drawdown after it takes a couple hits in a row, that's when you want to add to your position potentially, because you believe in your strategy and it's more likely to continue to move to the upside. And that is a trick that most traders, most of the non-professionals don't really embrace as quickly. And so when you understand your strategy, you have belief in your strategy, that's when you want to after a couple losses, that you want to get into it and get a little heavier or start getting into that position at that time. So that's something for you to understand. All right, so let's take a look at our IBO here. IBO had a couple of nice runs here in the last in the last week that I was gone here. We had a 52 pip risk trade. Okay, price dropped 129 pips. We had a 12-bar trailing stop. Actually got us out at break even on this trade right here. That was the first one. Second one. Sell. Barely keeps us into this trade. This actually hits our stop loss. So we got double hit actually on this trade right here. This one actually closed out at break even. So I mean, pretty much a consolidation. I mean, we had a good run here on this first part of it, but then we ended up in consolidation, and that consolidation really did. Hold on, I think I'm missing something. That's why. Hold on. I think there's some other trades here. Okay, and so now looking at the reversal candle, I'll come back to that. So we had a 3-bar IBO. 2, 4, 6 bars. We were just outside of the reversal candle buy here that we had. Honestly, guys, previously we had a nice reversal candle, and that went up maximum favorable excursion of 250 pips and ended up closing at about 100 pips of profit on the second position. Here you have the reversal candle that was just outside of our bound, so we didn't take this one. Another 3-bar IBO, no trade there. Here's another one. Now here's where it gets fun. We have a 3-bar IBO followed by a breakout, followed by the 3rd bar, which gives us a reversal candle. Very small reversal candle here. And you can see what it's done here. It's got about 16 pips of risk, so about 20 pips total with the spread. It goes up 60 pips, hits its first take profit, and actually comes back down here after hitting its first take profit and closes out at break even on the second position. But that had the potential, if price did run up, to really pack some value to your account there. So that's pretty much where we're at as far as that's concerned. Our ATR Sniper had a buy trade here, and these kind of went to break even, kind of moved up. Some of them hit profit, some of them went straight to break even. Okay, you can see that we're up about 2% here. We're going to be looking for some bigger moves on the ATR Sniper, hopefully coming soon. And you can see here how it caught some pretty decent trades, like this one. This was actually a very decent trade. Of course, consolidation pulled this out. We probably needed more of a trailing stop here to really fully take advantage of that. Triple Threat 3X is currently in a sell. You can see, guys, this is consolidation time. Not an awful lot giving here. We're going to be looking for a sell here. You can see that we have a sell bias. Okay, this blue line's below the purple, and we're going to be looking for a sell here. This is actually a good direction for us, I believe, but I do believe that price is going to move up, so I don't want it to happen now in the Asian session. I do believe price is going to move up first and then give us a shot downward. So we're going to wait for that, and you guys should be targeting somewhere around in this area is where we expect to see some price movement, or see some rebound here of price. Okay. How many hits on average on the Quattro? We had 2 back-to-back hits on this Quattro. That's just 2 in a row. In other words, 2 trades in a row that hit. We don't have a stop and reverse on it, so it's not like you had multiple trades that got hit here. But when you have that big move up like that, you can have 2 or 3 of them. After that the market corrects. And you're going to see that the strategy actually comes back to a mean, which is higher than its overall equity, but not as high as it previously was. So you can see a pullback after that point, after a big run. But generally, 2 consecutive trades, 3 maximum, generally on the Quattro, I found are the most hits that you can generally see in a row. And that's on a very, very extreme basis. Yeah, Mike, I'm sure that's true. The consolidation that we've had over the last couple of days, yeah, it's very possible. Absolutely. All right, Build Wealth, we currently have a trade running. You guys are going to start seeing a bit more activity going forward here. We do have a few trades that are set up now, and they're looking for a bigger play. So keep that in mind, and I'll be talking about that as they do take effect, as we do move into them. So we do have some trades that are setting up, and so be watching for that on Build Wealth. All right, guys, thanks for your time. I'm back. Glad to be back. I'm looking forward to seeing you guys tomorrow and here for the rest of the week, Monday through Thursday at 5 p.m. Eastern Standard Time for another edition of the FxEdge Power Hour. Talk to you soon. Bye-bye.